and welcome to the one-to-one EMEA online event. Today I'm here with Angelos Damaskos, Chief Executive Officer at Sector Investment Managers, a specialist asset management firm who's concentrate on precious metals investment and mining. So Angelos, thanks for joining me here today.
Thank you, Amy. Good to be here again.
Yeah, and so I thought maybe, for this interview, we could start with an overview of the precious metals markets today. So, what are some of the, most important trends that you've been seeing, and, what's most of interest to you today?
Yes, it has been a rather frustrating period, as you are aware, for over a year now. The precious metal market have been more or less range-bound and sideways trading. And the surprising thing that even though gold is trading at very healthy levels, today we are around 1950, 1960, we have hit $2,000 per ounce several times in the last 2 years, and the gold trend, the gold price trend, seems to be flirting with this psychologically important level of somewhere between $2,000 and $2,100 per ounce. And at that level, we see, from what we see from our valuation models, the producing companies are making a lot of very healthy free cash flow. They are generating significant income, some of which have started distributing back to shareholders by way of dividends. They have sorted out their balance sheet, they have paid down debt, so they are in a very healthy position to contend with any potential weakness in the market. And if we look at the earlier stage projects, the development stage projects that are being promoted towards production, they too enjoy a fairly healthy valuation outlook, again, because of the medium-term environment for gold prices. So most projects have all-in sustaining cost levels of somewhere between $1,000 and $1,200 per ounce. So at around $1,900 per ounce of gold, they are making very, very healthy returns. So the financiers are quite interested in providing significant financing for development stage projects. Now, the problem we have, and the way I have experienced the market for the last year or so, is that the generalist investors are completely apathetic towards gold. They are not interested in gold investments in general. And that is really what is holding back the market as a whole, because without the volume of capital that can be contributed and brought to the market by generalist investors, asset valuations cannot progress. So that's where we are, in a little bit of a stalemate.
Interesting. I mean, why do you think the generalists are not kind of interested in the market right now? Is this different than how it used? Have they previously been kind of more involved in the gold market?
Yes, historically they have been involved in various periods of the cycle. We are very aware that we operate in a highly cyclical market, of course, and which is prone to go into bear markets and bull markets. But I think what has held generalist investors back over the last year or so is that the rapid increases of interest rates by the central banks has competed head-on with the gold investment thesis. When investors can buy government bonds, which are considered relatively risk-free and very safe, and they can get a yield of anywhere around 5%, sometimes 5.5%. They are not particularly interested in investing in a non-yielding asset such as gold. And it's only a very small percentage, or a very small proportion of the market, of those who are risk-averse. They are concerned about market stability, about volatility in the equity markets, that are looking for safe haven assets that are potentially investing in gold. And even those people are primarily looking to buying into bullion as opposed to mining shares. Right.
Okay. Maybe we can go a little bit deeper into kind of which investors are looking at the precious metals markets, and what's, I suppose, what's of interest to them in terms of these investments right now?
Right. We have seen some interest from the specialist investors, Amy, who have always been involved with the marketplace. And some of them are not necessarily perma bulls, as I classify them, i.e. they tend to shift their bias in line with the market and move to the sidelines when we face a bear market and come back in when they feel the conditions are right. And these are the type of investors that are picking up the very low valuations we see at the moment in the market. They are buying shares in companies that appear to be extremely undervalued, at least in relation to where the gold price is trading now. But again, as I said earlier, the volume of capital that this sort of segment of investors bring to the market is relatively finite and is not able on its own to promote the valuations of shares in the market. We need a lot more interest from the generalist investor to come back into the market and support higher valuations.
So I thought we could shift a little bit to look at exploration financing, which is kind of one of the keys to getting more supply and perhaps more interest. So, who's investing in exploration within the precious metal space right now? And what types of projects or regions do you see the financing going to?
Yeah, well, that's the toughest part of the market at the moment. It has been really, really difficult conditions to raise capital for exploration stage projects. Again, most financiers have been looking at the specialist investors who are looking to buy into companies at extremely low valuations in the hope that when the market turns, as we are all fairly optimistic that it will at some time sooner rather than later, these companies will re-rate the most, will catch up not only with the developers, but also perhaps with the producing multiples. So that's really the kind of investment pool that these companies are looking to draw capital from. And from what I see, the other problem that the exploration stage companies are facing is that because of the low valuation, to raise capital at this level is quite dilutive. So they are unwilling to raise very large amounts of capital to promote a very strong drilling campaign, for example, and progress the development of their mineral situation or the reserve base, because it would be very dilutive for the capital base. So they are raising just enough capital to finance working capital, operating expenses, and a modest amount of drilling to keep going and developing the work on their projects. So it's a pretty difficult sort of bare bones situation I describe at the moment, right, both for the companies and for the investors.
Interesting. I mean, maybe we can kind of take a step back and take a view of kind of the junior precious metals market, or like the mining market overall. So, are there interesting companies or projects that are coming up? What makes a project stand out so that it would get this financing that it's needed? Yes.
Well, there are lots of projects that have significant potential for development, and there should be really a lot more interest from, at least in my opinion, from the producing companies that are flush with cash. Mm-hmm. And we know that most of the producing companies are basically producing more than they replenish. So they are shortening their average mining life. And they don't find new deposits soon enough that can fill this void. So yeah, from a conventional sort of point of view, those management teams should be looking at development stage assets that can be brought into production fairly quickly and therefore provide this future growth of the business. But I think the problem again is that if the management teams see that the investment community will not award them for a new acquisition, will not award them for what can be perceived a new risk addition to their portfolios, they would rather not do it. So they'd rather sit happily on a very large cash balance and wait for the market conditions to change. So it's going to be really a market-driven event that will change this stalemate. We have to see gold breaking well above $2,000, maybe 2,100, most believe. Most people believe would be a very critical level for a new bull market, a new strong bull market to start. And then the management teams will also sharpen their pencils and look again at the projects that they have been assessing for a while now. But in terms of projects that we see in the marketplace, we believe that the development stage projects that have passed through at least the preliminary feasibility study and can establish the economic credentials of their projects and can demonstrate that it has a lot of value at even at lower prices of gold, would be the ones that would be the first movers, would be the ones that would engage in corporate activity first. And then, of course, depending on the strength of a bull market, the other projects will see the light.
All right, interesting. I guess, finally to close off, I thought maybe we could look at, what excites you the most about various projects or companies that you see? What makes you kind of want to invest in a company or take notice of a particular company within the precious metal space?
Well, we have been historically and traditionally been focusing on the development stage sector, which we know very well. And typically, we want to see a very strong resource base, something that underpins the long-term production capacity of a project. And ideally, that resource base should be relatively higher grade, so it is much easier to process, and it is higher margin material. But also that it is in an environment and a territory, in a jurisdiction that supports the development of assets. We don't want to invest in unstable political territories where there can be sort of all sorts of hurdles. It might not be expropriation as such, that's pretty dramatic and probably now confined to the former Soviet Union countries. But you can have a sort of indirect taxation. You can have punitive moves by the regulatory authorities for environmental reasons and what have you. We have seen plenty of those happen in Latin America recently, and that has scared investors from certain countries. Last but not least, we want to see a very solid management team that has done it before, that not only is competent in the sector of expertise, i.e. the precious metal that they're developing, but in the territory that they engage in. They know they have worked for a long period in the country, they have worked in the vicinity in other projects, so they know all the requirements of the local regulatory authorities, the local taxation authorities, and how to push a project through the approval process. Okay,
sounds great. Well, certainly, things to kind of keep an eye on and see if it will kind of, the gold price will go above that 2,000 mark and kind of shift things around for the markets moving forward. But yeah, those were all my questions today. So yeah, Angelos, thanks for joining me here at the one-to-one online event and the assay. And we look forward to hosting you again at one of our events soon.
Thank you very much, Amy. Very good to speak to you again.